everyone, and welcome to our YouTube channel, Moneyline with Nancy at TV. In case you're not a subscriber yet, please do subscribe. Just press the subscribe button as well as turn on the notification bell so that you can get notifications when we upload our videos. Don't also forget to subscribe and join, follow, like our other social media platforms. Of course, you're seeing it right about now. Don't also forget to share this video across your platforms. Enjoy the video. Mr. Tilewa Adebajo joins me right now. He is the Chief Executive Officer at the CFG Advisory. Mr. Adebajo, good morning. Welcome to the program.
Good morning, Nancy. How are you?
I'm very well, but could be better. What is your reading, your sentiment about this Middle East crisis? It seems one day one trouble or one day more troubles. That's one. And do you think we're economically prepared for these tremblings?
Well, just as you had the Gulf oil windfall in Nigeria, this sort of crisis, what they tend to do is to increase the prices of oil on the international markets. Brent crude nearly hit 80, and we're still trying to see where that will settle. So it could be positive for Nigeria in the sense that oil prices will be higher, and we should be able to take advantage of that in terms of increasing our revenues. So, sometimes you can benefit from a crisis, unfortunately.
Increased revenues, I know that, because if oil price is selling for close to $80 right now, and I think our budget assumption for this year is not close to $80, even though the 2026 budget is still in limbo, perhaps a bit of paralysis there in terms of we're in the third month of the year, we've not gotten a working document there. If there are increased revenue, how would it trickle down to Nigerians? That's one question to be asked, since we've seen the macroeconomic gains of this administration being touted almost all the time, yet the nano and the micro and even the small not feeling it, not even just about businesses now, but the individuals. Should we just begin to smile or be happy about, okay, Nigeria will have increased revenue, but over the years we've seen that increased revenues, now we help.
Well, what we have to look at is that I think what is important for us now is that if we do get those revenues, then what it will help is that it will help at least reduce our deficit significantly. Our deficit this year is about 25 trillion naira, and it's clear that our domestic capital markets cannot fund that deficit. So what is important for us is to see how we can put in growth strategies that will grow the economy. So for Nigerians to see benefits from the outcomes of the successful outcomes of the reforms, the government needs to put in growth strategies that will grow the Nigerian economy at 8 to 10% on a sustainable basis. So we haven't seen these growth strategies. We have recently seen an industrial plan, but the coordination between industrial policy, trade policy, and basically investment policy is very critical. And not only should we see an alignment between investment, trade, and industrial policy, but those policies have to be in alignment also with fiscal and monetary policy. And really, that is what is missing right now. So for Nigerians to see any benefits, the economy has to be growing at 8 to 10% per annum.
Do you think that if we get this increased revenues, if we get this increased revenues, do you think that it will draw us closer to that double-digit percentage that this government is expecting by 2030, since they are trying to achieve a $1 trillion economy?
Well, a $1 trillion economy is not going to happen by 2030, because for that to happen,
so does that mean they are lying to themselves then? They are not being realistic.
Well, I can only interpret the data for you. What the data says is that if we're growing at 4% right now, and you want to get to 1 trillion, and your economy, your GDP is at 280 billion. So the economy will need to be growing five times faster than the current, 5 times faster than the current rate. That's what the math says. Having said that, to answer your question, if we get these revenues and we're able to put them into our capital budgets and spend money that could create a multiply effect within the economy, invest in social infrastructure, I think, yes, we can begin to hit the 8 to 10% GDP growth.
That
We've
is
done that
if.
before in 2013 and 2014 when inflation was 11% and Nigeria's GDP was growing in excess of between 8 to 10% per annum.
Yeah, we did that for a few years. I think that was during Okonjo-Iweala last time, and when SLS, that Sanusi Lamido Sanusi, was central bank governor. Let me still stick with this improved, assuming that one of the gains from this crisis is that we sell more, we sell oil and it comes at higher price. Do you think that the higher oil prices would improve federal revenue, just like you said? But if that improvement in federal revenue comes, do you think it is enough to offset the inflationary impact on households? And what do I mean? I just interviewed the president of Petron, the Petroleum Products Retailers Association of Nigeria. They are the ones that supply us petrol across the country. Prices have been adjusted already, between 910 naira and 930. Dangote also adjusted his gantry price by, I think, 101 naira. And what this means, basically speaking, because I don't want our viewers to think that we're just talking Turanchi or English. This English affects our daily lives. That means that there will be transport cost adjustment, there will be logistic cost adjustment, there will be increase in our domestic commodities, there's strain on consumers as we speak. Some industries will begin to suffer, perhaps even the tourism and the travel industry. So I needed to put this in perspective. So if this is happening with just the adjustment of fuel, or petrol, do you think that improved revenue will now offset the impact of inflation on households? How is it likely to impact headline inflation, which we've seen the disinflationary trend lately?
Well, I think the disinflationary trend, I think, is positive and will continue and be sustained. These price hikes, I think, is not going to impact because I think we had factored in the price of petrol when this devaluation happened at already close to 1,000. We were buying close for maybe 1,000 plus during the initial removal of the subsidy. So it was at that price that a lot of people have adjusted to petroleum prices. And because of the decline in the oil prices, we've seen that has come down. So I think that band, I think, continues to be important. And I think the shocks that you're talking about with the increase in oil prices, the pass-through effect of those petroleum price increases within our economy will take a bit of time. But I think the band is not that significant, and I think that we had dropped down to close to about 800, high 800s, and we had been at a high of close to over 1,000. At the time we were buying petroleum for 1,100, we were buying fuel for 1,100. So there will be a band by which petroleum prices adjust based on oil prices, and I don't think that will be significant enough to continue to increase the prices, because a lot of all these transporters and a lot of all these logistics people did not pass on the savings costs to the consumers. Transport fares did not reduce because the oil prices went down. So why should they go up again? So except we're doing price gouging. So that's the fundamentals. And so, even if it does, I think it will ease out over a period of a year.
Okay, to ease out over a period of a year. That period of a year is also stray, though, Mr. Adebajo. Those of you that are economists are very easy to just say these things in pure English that, as you are saying it, it's not like it's having effect, but we're all feeling it.
Yeah, we're feeling it. I mean, I fill my tank every week.
Exactly.
So I buy gas, so I understand those prices. I've seen how those prices have gone up and come down over a period of time. And, but like I said, because the prices came down, did not affect the price of transports. Transporters did not bring their prices down. And they benchmarked basically on about 1,000 naira per liter. They're still charging transport prices at 1,000 naira per liter. So my question is that there are leading indicators and lagging indicators, and these price increases or decreases, there's a lag. So by the time you take a look at that lag, I think we'll see some stability. That's all I'm saying. These issues are real. They're definitely real, and but some of these impacts would be lagging, because there will definitely be a lag. This impact of this fuel price increase would not see it until the next quarter.
What do you think the government should do at this point? Or they should just adopt that sit-down-look approach? What should they do concerning perhaps mitigating the impact on households? This is a country that over 100 million of us are poor. We live on, we are poor monetarily, we are poor multidimensionally. So impact on, how should governments mitigate impact on households?
For what? For the petroleum price increase?
No, I know that we are in a deregulated market already. What can government do to ameliorate the situation?
Grow the economy. Simple. Grow the economy 8 to 10%.
But that is not in the near term.
120 million people out of poverty.
That is not in the near term.
Well, you have to work towards that. It's not about you. When you have a situation, like I've said, it takes time to pull things through. Where were we 2 or 3 years ago, and where are we now? Okay, if we say that we've had our reforms and the economy is poised for growth, then what are the things you're doing now that you can create optimism for future, or you can see that you're heading towards a target? You need to be deliberate. For instance, I keep saying we have 3 sugar refineries on the ports owned by BUA, Dangote, and flour mills. They're still importing raw sugar after how many years? We have a sugar council that has been collecting taxes and tariffs on this. What are they doing with those funds? Why haven't we backward integrated? Why aren't Nigerian farmers developed the capability to supply these 3 refineries with raw sugar? Because these refineries have capacity to supply not only the ECOWAS sub-region, but the African Continental Free Trade Area. So what are the deliberate strategies? When is the government going to start Brass LNG? When are they going to start OK LNG? These 2 projects already have final investment decisions. LNG Trade 8 is suffering from the lack of gas. Where is the next big agricultural project? The value-added project. So we need to understand where these projects would be to add value. These are the sort of deliberate policies that you put in place, and the projects that you can get private sector participation to be able to grow the economy. And that is really the long-term solution, because productivity is key. Once you have productivity, a lot of all these issues you're talking about, including employment, will be resolved. But it takes time. It takes time. It takes time, and it takes consistency.
Mr. Adebajo, I get a sense of when I talked about our government coming in and mitigating the impact on households, I get a sense that you were already defensive to say, oh, what can they do in a deregulated market? That was why I actually said, I know that we're in a deregulated market. But why I'm posing that question, because government should be for the welfare of citizens, and that is what they do even everywhere around the world. Do you think that the government can also begin to be more vigilant around price gouging? There's also the Naira for crude policy, because we don't know when this war would end. We know now when it has started. We don't know where it will end. And if it continues like this, that means all prices will begin to go up. And that means
that's to our advantage.
Yeah, that is to our advantage to government revenue, but not to households. You will spend more money filling your tank.
Let me tell you something about
If we are not careful, it may get to 1,200 or 1,003 a liter. That is a lot.
What I'm trying to explain to you is that you are speculating at this point in time.
I'm not speculating, Mr. Adebajo.
So because we don't understand where the price would be, the price now is close to $80 a barrel.
A barrel, yes.
Let us try to remove this issue of oil price increase and separate it from household consumption. The impact here is that if oil prices grow up, fuel prices will go up also in Nigeria, and your concern is that it might cause an inflationary impact. Now, and you're asking what will the government do about it? Now, in terms of the current situation, maybe, like I said, you are in Abuja. So call the relevant government agencies and ask them what they're doing about their social intervention program. I know they have one, and that's what they're trying to do, to have some disbursements. Excuse me.
Sorry
And
about that.
things like that. But what is important is to focus on the fundamentals of the economy and the stability of the economy. Now, government does have some social intervention program. And like I've told you, on the general, the way it can work is that if we're looking at how you want to track how the prices would be able to impact inflation, yes, that's a genuine concern. And as you see, the MPC, as you know, have been very cautious in terms of dropping interest rates. And this is the reason why. MPC is cautious because you look at the global environment, you see how things are going, and there's a lot of uncertainty. So your ability to drop your MPC rates is as a result of these external situations, the fact that things might still turn south. So that is why you see that the MPC, it's an election year, there's a lot of global tensions that could impact negatively. So that is why the MPC is being extremely cautious in dropping their rates. If you take a look at the current rate of inflation, it's 14%. And the MPC rates are about 26.50%. That's a huge real rate of return premium. Now, having said that, you ask yourself why. They're concerned that it's their own argument, it's an election year, and there's a lot of global uncertainties. So if inflation begins to pick up again, at least they don't need to, begin to jack up rates. They have some sort of cushion that they have provided for that. That is my own understanding. So what else can government do to impact households? Like you said, yes, can you begin to more enforcement on price gouging, your social intervention programs? These are all these issues that government needs to do. But from my own point of analytical perspective, the reality is the fact that, yes, that is the buffer the managers of monetary policy have put in place for themselves. And you can understand their caution now with the events. So that has already been provided for from the monetary policy perspective. From the policy perspective, social intervention programs, activate your enforcements on price gouging. And for me, I would like to see a policy that can grow the economy at 8 to 10%, because that way you lift 120 million of us out of poverty, multidimensional poverty. That should be the goal. So there's medium-term policies, there's short-term policies, and of course, there's the far-term policies. Okay. So that is my explanation.
Okay. So I think both of us have come to a truce. So you understand me now. I pushed you to where I wanted you to speak on, and you went there exactly. Okay, so as we end the program, this crisis that you're seeing right now, how different do you think it is from the Russia-Ukraine crisis and the COVID-19 crisis? Have we ever, at least in the next 6 years?
I really don't like to comment on geopolitics.
Geopolitics affect the economy now.
Yes, but we understand we're in a political economy. We've come through COVID, Russia-Ukraine war, there's all the hype about it and what it's going to impact and all that, but, there's stability. This is another crisis that actually is beneficial to us. So what I need to do is, what I always look at is I look at my scenarios. When you do anything, you plan your scenarios. When we did our forecast for 2026, one of the biggest things we looked at was the impact that oil prices were going to spike, because it was clear that America had serious geopolitical tensions, not only with Venezuela, but also with Iran. So if you are a bookmaker and you are taking bets on America attacking Iran this year, it would have been a high probability that, America would have done that. So when we prepare our forecast or economic forecast for the year, we normally factor a lot of all these geopolitical tensions into play. Now, yes, we've talked about COVID, we've gone past COVID, we've talked, what is this coming to? We're saying that it's increasing oil prices. So if you have a benefit, the fact that your revenues are going to come up then you're concerned that your gasoline prices are also going to go up. Well, that's life, so we're in a deregulated environment, and those are the sort of things we need to deal with. We're not going to bring back the fuel subsidy because there's a war in Iran, or oil prices are going up. If oil prices are going up, then it should be to our benefits.
Okay.
And if our own local domestic gasoline prices go up, then so be it.
Okay.
But like I said, we've had a buffer. The highest prices we started paying for gasoline when they removed the subsidy was 1,100. So it's gone down from 1,100 now down to about just high 800s. And if it goes up again to another 900, it's nothing strange. So if oil prices hit $100 a barrel or 150 barrels, $150 a barrel, so be it. The prices will reflect accordingly, and then you have to make your changes accordingly within your economies. Even the Americans are complaining. So the gas prices have also gone up all over the world.
All right, thank you very much, Mr. Adebajo, for joining me this morning. I'll talk to you soon.
Thank you, Nancy, and have a nice day.
You too. Bye. All right, I've been speaking with Tilewa Adebajo, who is the Chief Executive Officer at the CFG Advisory. And that's the program for today. This is Moneyline with Nancy. Be the best you can be and be the change that you want to see. I'll see you all again tomorrow, God willing. Bye for now. Thank you for making it up to this minute watching the video. Thank you all. Don't forget to subscribe to our YouTube channel, Moneyline with Nancy TV. Like, follow all our other social media platforms where we keep you up to speed with fantastic interviews, as well as markets, personal finance, business, and economy information. This is the best place to be. I'll see you all again in the next video.